grandmaster traders and money magnets, I have to say, looking at SPY on the daily chart, it still looks bullish to me. Well, we have this uptrend line that I have here is a multi-week trend line, because you know, it broke out this down trend line I had here. Okay, this blue down trend line. It was a downtrend and it broke out, and now we formed a new trend, and it's been in an uptrend since May. This is a more micro trend I'm talking about here. Okay, if I zoom out, you guys are gonna see more bigger trend, the bigger picture. But I'm zooming in, looking at the smaller picture here, because the micro details are important as well. The little small details are important as well, and that's what Uncle likes to look at. I like to look at the small details. So we've been an uptrend since May. We broke out that blue trend line. We back tested that blue trend line. We back tested it on June 5th. We gapped up, which was a sign that the trend is continuing to be bullish. Today, we hit my yellow trend line again, which was also around my buy zone. I had a level around 599 and 600.4. Found buying pressure once again around that area. I covered this in my Discord. You guys know when I traded 15-minute chart, I wrote here 600.4 cleared in its current support. Let my group know and myself know, hey, it cleared on the 15-minute chart, which you guys can see right here. It happened right here. It was beautiful. It was very simple, nice and straightforward. 15-minute chart closed right above 600.4, and it was a blessing. Gave us a nice level-to-level move to my next level at 601.7. And then what happened? It cleared 601.7, which Uncle alerted in the group. 601.7 cleared, put in 603 in play. Cleared 601.7, smashed 603, and that is when the fun ended. That's when the fun ended, because the rest of the day, it started off strong, getting everybody excited. Uncle was excited, and then it just chopped for the rest of the day. Didn't do nothing. Thank God for level-to-level style trading, because if I didn't trade this level-to-level style, theta would have destroyed my contracts. But I played level-to-level, didn't get greedy, and this is what I try to preach to everybody who wants Uncle Charters' YouTube video. Using the levels and the setups, level-to-level, no greed, and get the F out of there. Sheep style, baby. But, you know, even though I'm saying I'm a sheep, part of being a sheep is acknowledging whether your ticker symbol of choice is bullish or bearish. SPY still looks bullish to me, guys. Not only that, it cleared another fib level. At 603. Right now in the post market, we are gapping below it right now, but you know, a lot can happen from now and tomorrow morning. But we're looking at the context, the current context. We bounced off this multi-week trend line and we cleared a fib level, 603. So for tomorrow, that is your equilibrium level. If we open below 603, then intraday bulls need to clear it. Either way, they need to keep price above 603 so that today's breakout does not get invalidated. And above 603, I have 604.5, 606, 607.8, 609, and another fib level around 611. I'm still overall bullish, guys. But if we are to get bearish, the first thing that bears need to do is get price below 600 to invalidate today's breakout. The next thing they need to do is break down this trend line. Break down this trend line around 601.7-ish level. Well, bears got a lot of work. And then if they can break down this trend line, they need to take out the buy zone at 599. If they can do all of that, Uncle will lean bearish once again. Get price below 603, break down the trend line, take out the buy zone at 599, and bears are good to go. We should get a multi-day, multi-level move to the downside if that happens. But I tell you guys, if that is not what happens and the price action give you bullish setups, play the bullish setups. Play the bullish setups. We are money magnets, guys. We're not bull magnets. We're not bear magnets. We're money magnets. And if you want bull or bear, then after you get your money, go buy some filet mignon. I don't think you can eat bear meat, but I heard it's not even good anyway. So why would you want to eat it? I don't want to eat it. Anyways, Uncle getting off track. Are we clear on the plan for SPY here, guys? Moving on to QQQ. QQQ gave us a bit of a bounce as well. A little bit of a higher close from yesterday. It's gapping a little bit low right now, but it needs to get above 533, 535 in the fib level at 536.7 to recapture and reclaim that multi-month trend line. Otherwise, if bears can break down 531.7 and 530 tomorrow, we can definitely get bearish. QQQ's not looking as good as SPY, but it's definitely possible that it can get bearish again. So all I can say is be open to either scenario. If we break down 531.7 and 530, Uncle will lean bearish and favor a multi-day pullback to the downside. But if tomorrow we get above 535 and 536.7, Uncle will be leaning bullish favoring us getting above 540. Here is Tesla. I have to say, this is kind of looking like a potential lower high. We had a pretty strong rejection from one of my fib level, my 61.8 fib level, which was around 331.6. Has some strong selling pressure around that area. Not to mention a false breakout setup here, because the last couple of days we've managed to close above the 50% fib level at 320.5. Today we closed back below. So the way I'm looking at it, as long as below 320.5, I do favor more downside on Tesla. So if you're bearish and if you're holding shorts or puts, I would keep holding on to those positions as long as Tesla can stay below 320.5. Breaking down 319, 315, 311 and 309.3 would be bearish follow through, especially 309.3, because that's a fib level, gap fill level. So dropping below it would show us that it's more than just a gap fill. It's actually pushing down a lot lower. Now, if we recapture 320.5, that would be a false breakdown setup and could send us back up to 330 plus. I would favor more high if the fib level at 331.6 can clear. I would be bullish again on Tesla if we're back above that level, but otherwise below 320.5, I am bearish. NVDA with the bounce, very strong bounce. It closed today at 145. I had a 144 level, so technically it did clear my 144 level. As long as above, I have a 145.6 fib level with 147 and 150 above that. If this is going to be a false breakout setup, then 144 and 142.5 are the levels that must break down to give us a pullback. But to give us a multi-day pullback, it needs to break down this trend line, which is around 141.5-ish. Break that level down, Unco would be bear bias multi-day, possibly even multi-week. But as of right now, the bulls are still alive. If they can stay above 144, more upside incoming. Coins looking, well, I want to say bearish because of the selling pressure was just simply beautiful. But we are technically still within the descending triangle pattern, which means we're still in the chop phase. Now, if we finally break down that 239 level, that's bearish. That's very bearish. We're heading down a lot lower, possibly a $20 to $30 move to the downside if we can lose that 239 level. Now, like I said, we're not in the clear yet. We're still within the chop range, which means if we bounce from here, if the dip buyers come in, this could send us back to the top of the descending triangle, which is all the way up at 257. So if bulls want that to happen, they need to hold 239 as support, clear 241, 245 in the 246.7 fib level. If that happens, gap fill is possible at 251, and then the 251 clears, we can head all the way back up to 257 to retest the top of the triangle pattern, and obviously above 257. And obviously above 257 would be breakout mode for coin. Bullish. And I do want to bring back the VIX. I haven't covered the VIX, but the VIX had a green day. VIX had a green day. SPY had a green day. Usually, these two ticker symbols inverse each other. Today, they did not. Bit of a divergence here. So we'll see if some type of correction comes. Either way, the way I'm looking at the VIX's context, SPY looking bullish. The context of SPY on the daily chart is looking bullish based on the bounce off the trend line and clearing the fib level. But the context of VIX, even though it was a green candle and a higher close than yesterday, context is still overall bearish, because when we hit that 19 area, we didn't quite get to 19, but we came close to that fib level. And when we got close to it, we faced selling pressure. Remember, we lost this level back in early June. Once again, we're back testing the breakdown level as a resistant. A previous support turned into resistant. Usually is not bullish price action, usually bearish. So even though there's a bit of a divergence here, the context wise, VIX is still overall bearish. And to really get bullish though, it needs to get above, once again, 19 and 20.4. As long as below, I'm still leaning bearish on the VIX. All right, guys, thank you guys so much for watching. This means the world to me. I hope you guys found value in this video. Remember, you guys are money magnets. Let's keep being magnetic. Bye.